So every year I try to look back at my predictions for the prior year and see how accurate I was. I think Fifthwall is in a very unique spot to predict what we think is going to happen in the year, but oftentimes we are wrong, or we kind of learn new information over the course of the year. So what I'm gonna do is watch the video I did for 2024, and in light of what has actually happened in the year, reflect on it.
So what does 2024 have in stock for Proptech and for Fifthwall, and what does the future hold? I think the single most important thing for early stage companies is runway and cash. The reasons are obvious, which is that equity today, raising equity, outside capital for a loss-making business is more expensive than ever because valuations have come in and multiples are lower. So the ability of an entrepreneur and a leadership team to just extend the runway and preserve cash is absolutely critical.
In terms of that point itself, that was absolutely true. I think the companies that fared the best through the last 2 years, which have been exceptionally challenging for Proptech, are the companies that just understood the reality of the capital market situation, that everyone was pinched for cash, cost of capital was extremely expensive, and any and everything you could do to cut your costs and extend your runway was going to work to your benefit. And that was really hard. And I would say we at Fifthwall worked with all of our portfolio companies around restructuring their teams, restructuring their cost structure, restructuring their go-to-market, in some cases recapitalizing the businesses and setting them up for success going forward. And it was just an enormous amount of kind of backward-looking defensive work on making sure these companies were set up for success. The upside of that, and I think the thing that should be kind of cause for optimism right now, is that the companies that are coming out of these last 2 years and how much stress they've been under, these are much stronger, more durable, more long-term viable businesses. And that's because they've seen hard times, they've endured hard times, they've changed their cost structure, they've extended their runway, oftentimes they've improved their business model, and they're just war-hardened. The same is true, honestly, of venture funds. Like we've been through that alongside them. But the last 2 years, companies that leaned into really embracing cutting cost and extending runway fared the best. I think there is kind of a momentum shift that's afoot right now. The companies that are coming out on the other side are just stronger. So that was totally true. And wow, we put a lot of work in over the last year putting that prediction into reality. Let's see what the next point was.
Companies that have cash and have runway are very likely going to be consolidators of companies that don't. And I think you're going to see, much as you did last year, a lot of M&A and a lot of acquisitions in the Proptech and climate tech ecosystem. And I think the companies that actually have the ability to extend their runway and have a lot of cash are going to be able to acquire their competitors, their peers. They're going to be able to bolt on solutions in a very attractive, very cost-effective way for their business. And so I think you're going to see a lot of that.
On that second prediction, that didn't really happen, at least in the year. I still think it should happen, and I still think there's lots of reasons why it would make a lot of sense for consolidation to happen within the Proptech ecosystem. But there weren't a lot of concrete examples of that happening. And now this obviously happened in the beginning part of 2025 with the news of CBRE acquiring Industrious. It's actually, you're seeing consolidation in a different way, which is you're seeing strategic owners and operators and developers of real estate, so like the incumbents acquiring upstarts like Industrious. Industrious, a major investment of our firm, I think one of our first investments in CBRE, which was literally our first strategic LP, and they've invested in every single fund of Fifthwall. So that kind of consolidation, I definitely didn't expect, and I do think you're gonna see more of that. So in reflecting on that one, I still think it's true, although it didn't happen last year. I definitely think it should happen, and I think there's another dimension to it, which is it will happen between the big corporate owners of real estate and a lot of these Proptech companies. So you're seeing kind of a crossover of spheres, the real estate world and the technology world, not just acquisitions among the technology companies. So let's see what the third is.
I think is, already well underway, but is only going to accelerate, is that these two separate spheres that Fifthwall has built its business through, which is Proptech, software for the real estate industry, and climate tech, which is all of the tech to decarbonize the real estate industry, hardware and software and renewable energy. Those two things are going to blend together and merge. They really are one and the same. And the reason they're one and the same is the very core of what makes fifthwall unique, which is our ability to work with these large institutional real estate owners that are looking to adopt technology. And this line between software and hardware that we identified and many investors identify isn't as apparent to these real estate owners. And so I think the overarching nomenclature is just going to be called Proptech, and it's going to be an inclusive term, but that is going to happen.
So that last one, that is absolutely true. I think you've seen the coupling of real estate tech and climate tech, and I do think the nomenclature, the taxonomy of all of it is just going to end up being prop tech. But I think we've seen and we've heard from LPs in the market that prop tech investors that don't have the ability to invest in what has traditionally been called climate tech, so like energy tech businesses, materials tech companies, industrial IoT, a lot of software investors just don't have the ability to pursue those kinds of companies. That's a real disadvantage. And the thing that's probably an added complexity to that is with the second Trump administration, and I think the pullback in ESG and impact investing, I think that's going to create real headwinds for kind of climate-only funds. And so I think that climate investing and investing in the energy transition as a strategy makes a ton of sense and is super viable. But I think it will have to, in some ways, get subsumed under a broader or different thesis, very much like how I've suggested with prop tech. So I think prop tech will be the driver, but climate tech is a component of that. And I think that is a trend that's here to stay. I'm actually really optimistic heading into 2025. And hopefully when I look back on my predictions for this year, it will be something I can reflect on and see that, yeah, hopefully those actually came true, more so than last year's predictions.